Okay, you can breathe a sigh of relief this morning. It's not going to be a long-winded video. The reason for that is I made a long-winded video, hence all these levels on here, and it failed to save itself, some sort of error. So here is attempt 2 at this morning's summary of today's trade, and it was based on the H1 reversal. Now I did go into great detail about saying what a reversal is, and I will just quickly go over what I mean. This isn't just a newfangled, cheap or expensive, call it what you like, indicator system that some wannabe trader has just thrown together. These alerts are just a simple way for me to identify a possible valid trend reversal. All they are is a 3 crossing the 10 moving average. It could be a 3 crossing the 12, it could be a 3 crossing the 9, it could be a 2 crossing something, I presume, but I've never tried that. All it is the price closing over a certain moving average. But there are good ones and bad ones. Here's the example I gave in the previous attempt at this video, which is between these two. A bad one is when you make a trend but you don't break the resistance. Blue is when the price has broken some sort of resistance, and pink is when the price is closed to or broken some sort of support. And in these two examples here, they weren't picked because of the chart. They're there on the chart that I traded this morning. This is a bad one because this low here, we get the alert after a trend reversal. So we have got a trend in place here: low, high, high, low, high, high. What this hasn't done is closed over, and this is why this yellow line is on this candle here. It hasn't closed through a prior downtrend, and by that I mean high, low, lower high, lower low. So whilst we have an alert for a possible trend reversal, it isn't actually what I would call a valid trend reversal because it hasn't broken through. So another example of a valid trend reversal would be this one. Although we gapped up during the night from Friday to Monday, you've got an alert here. You can clearly draw, this is why this line's on here, you can clearly draw a resistance on the top of this candle, and you can clearly see we've closed through that resistance. Now the gap confuses me, always does. I expect gaps to be closed because I've been told, I don't know for sure, that it's something to do with big banks, hedge funds getting caught with their pants down. Something's happened over the weekend. Something's affected the price. All these guys that maybe have been in shorts and whatnot need to get back into the correct direction of trade. So they try to bring the price back. I don't know how they do it to close that gap. Anyway, I digress. The point is you've got a trend reversal here: high, a low, a high, a high, a low, high, a high, higher low, higher high. Old resistance has been broken, it's been used as support, and the price goes up. What happened or didn't happen here? Old resistance didn't get broken, didn't get used as support on the lower time frame. No thank you. Here, low, high, higher, low, higher, high. Ultimately, we've broken the resistance. We've used it as support even on the next candle, that one there, and the price is continuing up. So that's my trade. That is what the indicators are telling you. We'll go through a quick support example. Here's a reversal, a valid reversal to the downside. Swing high, low, high, high, low, high, high. On the 5, this is an hourly chart. Those hourly candles represent 5-minute trends. Low, high, low, lower, high, lower, low, and close, break, call it what you like, down the price goes. That's a valid reversal. Try and find a 5-minute reversal here, up and down, and you're in. Here's an invalid reversal. This uptrend, these two green candles, low, high, high, low, high, high, have not been closed through by a high, low, lower, high, lower, low. So that would be a non-starter for me. I can clearly see what's happened here. This support at the bottom of this green candle has repelled the price. This resistance, the top of that red candle, has not repelled the price. And what I did also on the lower time frames, I talked about why I took this trade at the time of day. I always like to trade between 6 and 8 o'clock, as you know, because the big boys aren't. I'm not trading against the big boys, in my opinion. I'm going with the trend, if you like. Here, this could reverse. This could be a double top here. They could reverse it. The only way to really even think about trading this, in my opinion now, would be to wait for that to be broken above, closed above, possibly a small reversal to the downside and a trade off of that resistance when it acts as support. This has got a long way to go, in my opinion, but again, that's all supposition. I just want to be trading the best looking possible trade in the mornings. They do go wrong, but by doing the analysis like I do, I limit the mistakes. And what I've done here is I've drawn what was the other scenario. So suppose I even considered trading short. Just like I said to you before, I want to see a close above this, then a possible pullback, so I could draw something like this on the chart. Up, down, and then I would consider trading. And this is what I've done here. If I'd have wanted to go short against all the indicators and all the momentum and direction, if you want, of trade, for want of a better word, I would have had to wait for a trend to form. High, low, lower high, lower low, old support acts as resistance, and then consider getting in somewhere here using a 5-minute pink arrow. This would have had to have been a 5-minute blue arrow, much same as what's happened here, but this is trading straight into a resistance level. This could easily fall back this way. So that's it. This morning's good trade, positive trade, whatever you want to call it, and hopefully an explanation of what these arbitrary pink and blue arrows are. They are not just a simple MACD, Fibonacci, stochastic, call it what you like, indicator. They are just an alert for me to see when a trend has reversed. And we talked about the trend on the 1 hour chart. Well, here's a trend reversal on the 5-minute chart. Low, high, high, low, high, high has been reversed against with a trend. High, low, lower, high, lower, low. And in my opinion, that's a valid trend because the low of that candle has been closed through. There. That low has been trended through. There it is there. And that's good. This alert, in my opinion, hasn't, because we've got a massive amount of support here. You could call this the low, the high, the high, low, the higher high. And this the high, the low, the lower high, lower low, lower high, lower low. It's not closed. It closed here. We could be interested in going short. Okay? That's the critical differences. This is a valid one because that low of that green candle, the uptrend, low, high, high, low, high, high, has been broken by the downtrend. High, low, lower, high, lower, low, lower, high, lower, low, and close here, and down she goes. Some do work, some don't work. There's more, you use the higher time frames to identify what's going on. Here we've got a shooting star candle printed. It's only a 5-minute, but this resistance has done something to the price. If I had taken this trade as a result of this now, I would have been annoyed with myself because I've broken my rules. I'm not trading directly after an alert on the higher time frame. Higher time frame always leads the way for the lower time frames. Anyway, I have rambled, I apologise for that, but hopefully there's some worthwhile information in the summary of today's groundhog trade. Thank you for watching.